Okay, we are going to recap what is the goal of the company. If you may recall, I said the goal of the company, no matter what it is, everyone must agree that it is the same. And we had tried to see the linkage between if the goal of the company is making money or customer satisfaction or employee satisfaction or conventional way the MBAs use, satisfying all stakeholders, it all comes to the same thing, one and the same. The moment we choose one, the other becomes the necessary condition. However, since out of the various chosen, let me say, choices of the goal, we've observed that making more and more money is relatively less difficult. So once again, our goal for the presentation will be 4M. 4M stands for making more and more money. We also looked at it, what are the three important financial measurements? One was profit after tax or profit before tax, return on investment or return on capital employed, and the most important one, free cash flow. I also remember I shared with you that if you don't measure anything else, just measure one thing, free cash flow. And measuring free cash flow is actually very easy. Just check your bank statement. Whatever the money has gone up or down, that shows whether you have a positive cash flow or negative cash flow. While on one side, these three financial measurements are well known. However, most companies, notwithstanding recent problem, they are unable to increase even one of their correct measurements continuously for a long period of time. In fact, in one study, somewhere around 24th September 2004 or 2005, actually, there was a report in Economic Times. It had measured just one thing: how many companies that operate on Bombay Stock Exchange have reported even 1 rupee increase in profit after tax for the last 10 years. And the only out of 3,000 companies, just 23 had shown one improvement in one parameter, that is profit after tax. So forget about the other two. I mean, if all three were to be taken, I could not find any one company which is able to increase all the three parameters for a consecutive period of 10 years. So one important thing is that everyone measures a lot of financial parameters. How come they're unable to improve these parameters consecutively for a long period of time? That brings us to the purpose of measurement. Why do we measure anything at all? Anything at all, there must be some reason why do we measure at all. To my mind, the only purpose of measurement is helping us take a decision for the corrective action for achieving the goal or making more and more of our goal unit. Now, most of the parameters, financial parameters, the way they are, it becomes almost next to impossible for anyone to take a meaningful decision to help us what will improve free cash flow, what will improve profit after tax, what will improve ROCE or return on capital employed, etc. So then we discussed, is there another alternative way? And then I shared three parameters for you. TOC metrics. Three parameters were throughput, investment, and operating expenses. Now, out of the three, the most important obviously is the throughput. Throughput is net sales over a period of time, less totally or pure variable cost in that time. And how do we define pure variable cost? If we were to produce 1 unit less or sell 1 unit less, then whatever cost will be saved will be considered as pure variable cost. We also had the two other measurements, investment and operating expense. What is investment? It is all the money that belongs to us but not available as free cash to pay to our vendors or our salaries or to buy anything. I includes all the land, building, machinery, all the inventories, all the receivables, all the money that belongs to us but not available as a free cash. It also includes any uh, uh, extra paid taxes, any refunds what we have to get from the insurance company should there be a mishap, or any tax refund, extra GST paid, etc., etc. Of course, from here in I, that is the investment, we subtract if we have to pay anything to our vendors where we have bought the material but yet not paid. That means we owe this money to our vendors. That needs to be subtracted. That is I. And lastly was operating expense. Operating expense is those expenses which even when we do not do any production or sales, those will be still be incurred, that we call operating expense. In this lockdown situation, actually, we are very close to our operating expenses. The rent still has to be paid. The depreciation is still there. The interest on the bank loan still has to be paid, etc., etc. Salaries have also to be paid. And there are, if you have an insurance premium, that also continues. So these are operating expenses. I also explained that should you have any dispute, whether it's an operating expense or variable expense, a simple method is just toss a coin and choose whatever you like. The reason being, this is such a parameter whose impact will be almost next to negligible on our decision making. Here I must share my guru, Dr. Goldratt's wisdom, and that is, be approximately right than precisely wrong. Now, many times we waste a lot of time in trying to be too precise. Frankly, it doesn't help. For example, if today somebody gets a temperature of 98.6 or 98.65 or 98.55, it doesn't matter. The only decision is, should we go report this temperature to the government authorities or not? If it is not, that's good enough. So don't waste too much of time in trying to be too precise. In order to check, ask yourself, if my temperature would have been 98.55, would I have taken a different decision? If my temperature would have been 98.65, would I have taken a different decision? If no, then why waste time? Whatever it is, good enough. Now comes the free cash flow, the next parameter. In free cash flow, in fact, as I stated earlier, this is the only thing which matters. Free cash flow is profit less incremental increase in I. What do we mean? If we are measuring free cash flow over a month, it will be sales minus pure variable cost minus operating expenses. That will become profit. Now, profit less, if we have increased our inventories, cash flow will be impacted to that extent. If we have purchased a new machinery, that will also be impacted by the same amount of flow. If during the month our operating receivables from customers have gone up, it will also impact it negatively, and vice versa. If our vendor payables increase during the period, then the cash flow will be impacted positively. So this is free cash flow. We are going to spend more time on how to improve free cash flow today in a few minutes. Concept of constraint. Now, though I had spent a lot of time last time, but I'm again trying to put it. Constraint is not a negative thing. It is not what needs to be eliminated. In any case, at any given time, in any chain or any business, there'll be different links. And constraint stands for the link whose output is the minimum out of all of them. And concept of constraint basically talks about, unless you can identify and improve the strength of the weakest link, the strength of the chain cannot be increased at all. Similarly, if we are saying our goal unit is to make money and money is throughput minus operating expense, please appreciate operating expense remains constant. But if we have to increase profit, we have to increase throughput. Now, in order to increase throughputs, you will have to identify where is your current constraint. To my mind, there are only four physical constraints. What are these four physical constraints? You have everything else except cash. Cash not being there, there's no way you can start producing and supplying to your customers. That is one type of constraint. Another constraint is cash is very much there. Unfortunately, your suppliers are unwilling or unable to supply material to you because of the various disruptions in their plants. So you also can have that though you have enough money, but you still don't have adequate raw materials in your plant. The third one is that it is quite possible that you have cash, you have enough supplies, but right now you are unable to produce or deliver on time. That is where operations come into a picture. That somewhere you are unable to, your weakest link right now happens to be operations. What it means, you have enough cash, you have enough raw materials, you have enough orders also, but right now the weakest link is your operation, which is unable to fulfill all the orders. Why? Because it has become the weakest link, the constraint. And now last comes the orders. It's also possible. You have cash, you have supply, all the raw materials, you have enough capacity to deliver also, but we do not have adequate number of orders to deliver. So your constraint in that case be order. Here I must start another small thing, that many times people use the word orders and market interchangeably. It is wrong. To my mind, no one has a constraint of market. Why? Why do I call it you have no constraint of market? Because of the definition I use. If you don't have 50% of the world market, please listen carefully. If you don't have 50% of the world market, then perhaps you can say you have a constraint in market. Today, that constraint of market constraint, maybe with very few companies, maybe Microsoft, maybe Intel, or a few other companies can have, but most of us do not have even close 1% of the world market share. So please don't say we have a constraint of market. Yes, you may have a constraint of orders. I'm not denying. Now, for orders also, how do we know whether we have a constraint of order? It is very simple. If you say you have a constraint of orders, check, are you able to deliver your current orders on time and in full without one piece being late, without one day late? If that is not the case, how can you have order as a constraint? Because as of the moment, whatever orders you have, you're unable to deliver on time, then adding more orders will only delay the current orders also. So that is the case for orders being the constraint. Now, there are still two, three other constraints we have to identify. Let's look from cash angle. Now, I'll focus extensively on this part, cash constraint. What is cash constraint? Cash constraint typically would mean the following conditions. You have cash constraint only and only if the following conditions are met with. One, there are sufficient orders. How do we know we have sufficient orders? We are unable to deliver on time in full, OTIF, not more than 95%. That means you are not fulfilling all your orders perfectly. Hence, you have sufficient orders. Your manufacturing capacity, OEE. Please don't confuse with OE. OEE is overall equipment effectiveness. Simple words, very simple words, efficiency at 24/7 basis. If none of your equipment has a utilization of 95% on 24/7, please appreciate, I'm not talking of one shift, I'm not talking of two shifts, I'm not talking of 5 days a week. I'm not talking of 6 days a week. I'm talking of 365 days a week, 24 hours every day. If your OE is less than 95, that means you have enough capacity also. You have sufficient suppliers also. However, you have raw material shortages as suppliers are refusing to supply unless paid upfront. Now, you have suppliers, they're ready to pay to give it to you, but they say, first give us the money before we give it to you. Unfortunately, additional cash cannot be easily arranged. I think this will be very easily understood these days. Today, no bank is readily giving you the credit. Not only that, they're reducing your current credit limits also. Now, it can happen that you may have sometime cash shortage. Cash shortage means I'm unable to fulfill all my financial commitments on time. But once in a while, if you have your suppliers, your service providers, even your employees don't stop coming just because 1 month's salary has been delayed or some payments have been delayed. This is the meaning of cash shortage. Cash shortage does not imply cash constraint. Cash constraint happens once you have a cash shortage and the vendors or service providers are not willing to provide you their services because you are not being able to pay them on time. However, if cash shortage is not managed properly, it will lead to cash constraint. Is this clear? Any questions, please put in the question answer section.
No, we don't have any questions so far.
Okay. So I wanted to give you a flavor of what is the condition when we say we have a cash constraint. Many times people have ambitions, oh, I want to put up another plant, I don't have cash. That is not cash constraint. Cash constraint is your vendors are not willing to supply you material because you are not able to pay them on time or beforehand. Now, a lot of questions were asked about 5 focusing steps, process of ongoing improvement. We call it POOD. First step, which we have already agreed, we call it step 0, decide and the goal and its measurement. Once again, a lot of things are problematic at this stage. Most companies want to measure how much sales they have in numbers or in financial turnover. Those are the means, those cannot be the measurement. You may remember we said our goal is 4M. 4M stands for making more and more money. I'm using this parameter for all business organizations. Obviously, if you are an educational institution which is not for profit, then the goal cannot be making more and more money, or an hospital or any other organization. So this presentation, what I'm sharing, is primarily for profit or commercial organization. That is step 0. Step 1 is identify the constraint. Now, please appreciate, if you're not well and you go to a hospital and start taking medicines without proper diagnosis, the chances are you may land up into more trouble. So unless we identify where is our current weakest link, we call it constraint. Unless we can identify that and work on it, there is no possibility, not even theoretically, of any increase in throughput and correspondingly profits. And I've just shared the physical constraint can only be in 4 places, no more, no less. Whenever you want to identify, look in only the 4 parameters. Do you have cash so that you can pay to your vendors on time? Do you have enough vendors who are able to supply you material on time? That will be, if you don't have, that's a supply constraint. Do you have adequate capacity? And do you have enough orders? So between the 4, you choose. Now it is quite possible in the days to come, your order inflow may come down. Even your capacity may be constrained down because some people may not be able to come back to the plant. Supplies will definitely get disrupted because of supply chain disruptions, and of course, cash. Now, all four cannot be constrained. It is the least among them we call the constraint. Please, I'm once again sharing. They may be obstacles, but they are not the constraint. Constraint at any given time is only one out of the four. Please, if you have any questions, please type out in the chat box.
So there are a couple of questions.
Yeah.
The first question is, what is the worst constraint apart from cash?
One moment. What is the worst constraint? Okay, this is an interesting parameter. What we'll have to look at it. What do you mean by worst constraint? Can somebody, what do you mean by worst?
This is from Dheeraj Bhatia.
Okay. So why do you call something worst? Please help me understand that. Dheeraj? Irak, you can read out for me?
Yeah, he has not responded yet.
Okay. Let me give you my response. What do I mean by worst constraint? Or what do I understand by worst constraint? The most difficult to handle. Is that a good definition?
Yeah, he's responded exactly.
Okay, fine. So now let's look at it. The constraint which is the worst, in my opinion, is cash. The next worst is supplies. That means our suppliers are the one, we are dependent totally on the suppliers. They control my throughput. Dheeraj, is this clear to you?
Yes, we're waiting for him to respond.
Okay. In fact, the right question to ask here is, where shall we have the constraint? Where shall we have the constraint? This comes in step 5. So let me run through. So I'm asking that question to everyone. Where shall we have the constraint?
So Dheeraj has said in the market.
Okay. Look, I'm trying to take slightly an angle, different angle altogether. I'm assuming for all practical purposes, we will assume that our goal is to be happy in personal life. Does everyone agree? If our constraint has to be, if our goal is to be happy, should the constraint lie outside us or inside us?
Inside, yeah, we're getting a lot of responses inside.
Inside. Hence, I'm sharing something. Whenever you are unhappy, if the cause is outside you, you're in deep trouble because you can't do much about it. So by definition, constraint should always be internal, because if the constraint is internal, then I can do something about it. If the constraint is external, I have limited, let me say, potential to impact it. Now let's come back. Should the constraint is market? Now, Dheeraj used the word very carefully. You do not have a constraint of market. Nobody has a constraint of market other than Microsoft and Intel, and you are not neither Microsoft nor Intel. So please don't use market as a substitute for orders. So are you saying, should we have a constraint in orders? Please respond yes or no.
We are getting a mix. We are getting no from some people, yes from some people. There's a mixed response.
Please appreciate, the moment you say my constraint is orders, it does not mean anything. It's neither good nor bad. It depends. If you're a company like Zoom, if order is the constraint, what is the meaning of that? That means I have more capacity to execute. my what you call capacity to serve is more. Now, is there any problem when with Zoom if it has constraint of orders? One constraint will always be there. For God's sake, don't start thinking that you will not have any constraint. One will always be there. Now we have to choose between the four, where it should be. Two constraints which I already explained should not be there in my opinion. One is cash and another is supplies. Now that remains only two, either operations or orders. Dheeraj, please tell me, is order, is it an external constraint or internal constraint?
Order,
anybody can answer. When I'm using Dheeraj, anybody can answer, no problem.
Okay, so initially a couple of people wrote external, but now everybody is writing internal.
Thank you very much. You see, it's very simple. When we get orders, who gets the order? We get the order. And when we don't get the order, it is the market. That can't be the reason. When you do well, you have done well. When you have not done well, then also you have not done well. So order can also be an internal constraint. It is your ability to generate orders. It's an internal thing. Now comes, when shall we have a constraint in orders and when shall we have a constraint in operations? If you're a capital intensive industry, like a steel plant, like an automobile plant, which is very capital intensive, your constraint must never be orders, because by definition, you'll have to keep your capacity idle, which is expensive. However, if today you are in the pharmaceutical company, incidentally, pharmaceutical companies are not capital intensive. They are R&D intensive, but not capital intensive. Frankly, if you have visited any any pharmaceutical company, they have only three major equipments. Major. And they are all available similar to your in kitchen. They are mixer, grinder, pressure cooker. They have better names for them, but overall they have only these three major equipments. No pharmaceutical company in the world should ever have a constraint of capacity. Otherwise, they'll be in deep financial trouble. Today, if any company says, I have decided that my operation will be my bottleneck, then the government or the state will take over on that. So for a non-capital intensive industry, it makes sense to have constraint of orders. But for a capital intensive industry, it makes sense to have constraint in operations. Is this clear to everyone?
Yes, everyone is saying it is clear, but the follow-up question that is coming is, how do we grow then, or how do we get more profitable orders?
Now, once again, whosoever has asked this word profitable order, profit is never for an order. Yes, every finance man in the world uses his cost accounting. I will not have the time to go into more detail today. Throw all cost accounting out of the window. They are totally, utterly useless, and in most cases harmful. So real question comes, if our constraint, we will decide whether it's be orders or operations, how do we grow? Excellent question. After a very long time, somebody has raised this issue, not only here, even outside. Let's say you have decided your constraint to be operations for a capital intensive industry. Now, before you increase your capacity, which comes in step 4, elevate, check if when we add the capacity, will the constraint shift? Which means, are you sure you will not run out of cash? Are you sure as you have expanded your capacity, you will not have a shortage of raw materials? Are you sure you will not have a problem of orders? Unfortunately, most companies don't think in these lines. Before you elevate, step 4, before you elevate, check on both sides whether either from the supply side or from the demand side, there's a possibility that the constraint may shift. If that being the case, what shall we do? We should first increase capacities of supplies or order generating capability before you increase the capacity of your plant. Is this clear to everyone?
Yes, we are getting responses. Yes. Another question which people have asked is cash, supply, operations, orders. These are all measured in different units. So how do we know which is the least?
I did not say you have to explain. I'll have to explain. Did I explain you when is your cash constraint? Is this clear to everyone?
Yeah, please type, is cash constraint clear to you?
When cash is a constraint, is this clear to everyone? I had given the complete parameters to identify whether
Yes,
you have
yes,
a cash constraint.
everybody is saying yes.
Okay. I've also given you when order is your constraint. There was a very clear definition. Is your OTIF less than 95% or more than 95%? When OTIF is less than 95%, then order is not your constraint, period. If OTIF is more than 95%, yes, order is your constraint. Is this clear?
Yes, we are getting responses. Everyone is saying yes.
Similarly, I'd also mentioned to you, if your OEE, even for one equipment, is not more than 95%, then operations cannot be your bottleneck. You remember that?
Yes, everyone is saying yes.
Now, materials, if you get most of your materials on time, if you are paying on time, then materials is not an issue. So let me help everyone understand very carefully. Supplies, I'm repeating this. Supplies can be your constraint if, despite paying on time, you are not able to get 95% of all your supplies on time in full. Then you have a constraint of supplies. Accept it.
Yes, everyone is saying yes.
If OEE is not more than 95%, even for one, then you have enough surplus capacity everywhere. Operation is not your constraint. Now, similarly for orders, if you're unable to fulfill your current orders on time, then any more orders will create more problem for you rather than resolve it. Do you agree? Now, from here, I had given you when something is not a constraint. However, when is it a constraint? Let me explain, start from supplies. Many times, many customers of mine, despite their paying on time, they had problem of not getting material on time. And here you will have to look at this step 3, subordinate all policies, decision and procedure to exploiting the constraint. What do we mean by that? Eventually, out of these 4 physical constraints, the real constraint is a policy of your top management. And what are the policies for supplies? Let me give you. The most common is called L1. L1 means least cost. We decide whom to give order primarily where the cost is the lowest. Now, this is the most stupid thing, because many times one small part, if not available, you cannot assemble everything. But that part you had given to a supplier whose cost was the lowest, but unfortunately, he's unable to deliver you on time. In the process, what has happened? For want of a nail, the kingdom is lost. For a very small part, you cannot assemble anything. So typically, L1 is one such policy. It does not mean every time you should go and buy the most expensive. But remember, at the end of the day, if I have to buy at a slightly more expensive place, but in the process, even though my variable cost goes up, but my total throughput goes up. How can the throughput go up? Throughput per piece can come down, but now I'm able to execute more orders. My overall throughput goes up. What is the problem? So typically for supplies, L1 policy is one of the worst policies. Second is saving, or whosoever gives me a lot of credit. If cash is not your constraint, having more credit can create a problem for you because you go to suboptimal suppliers. Third thing is, which is also not uncommon, that I am getting a bribe from the supplier, hence I'm giving it to them. Or let's say, not so horrible is that we have to give orders to our sister company, because many times we have groups, industrial groups are there. We have to buy from our sister company, good, bad, ugly. That is again a policy constraint. Now, there are a few others I can share, but have you got a gist of it? That ultimately all constraints are decided by your policies. Now let me go to operation as a constraint. How is it possible that I have enough capacity, but I'm still not able to deliver on time? I got raw material on time, but I'm unable to deliver to my customers on time. And none of my equipment is having even 80% utilization. How is that possible? In fact, this happens in most manufacturing companies. It happens for one stupid thing: trying to use all resources 100%. Trying to use all resources to 100%, this creates the problem in most companies. So in most companies, even though constraint can be any one of the four, physical constraint, actual thing which you need to correct is a policy constraint or a policy of the organization. I'm going to share specifically for the cash one, because today my focus is primarily because more than 50% of the companies are either already in cash constraint or likely to be in very near future. So my most time I would like to spend on how, if you get into cash constraint, what to do. Shall I move on?
Yes.
Okay. So somebody last time had asked, what are the 5 steps? Here are the 5 steps. First, identify the constraint. Second, exploit. Exploit means make sure that your whatever is your bottleneck or constraint is there, it is utilized fully. Let me give you a small example. Many times these days, people are asking me what to do when the workers don't come back from their villages once the lockdown is lifted. Answer is very simple. There's no shortage of people. The problem is we don't want to pay more than what I was paying till yesterday. And here, don't look into anything. Look at it. Let us say you have a shortage of few people of a particular skill, and you decide to hire a few people on a daily basis, but you will pay twice the salary. Now let's look at it. Oh, how can I pay twice the salary? My cost will go up. Yes, your cost go up. The goal of the company is to make more money, not to keep the cost low. Ask yourself, if I hire 10 people at twice the salary, what is the amount of money I'm paying? And what is the extra throughput can I generate? Now, if my throughput generation is far higher than the money I pay to extra payment which I'm paying to by doubling the salary, what is your problem? Please throw the cost accounting out of the window. And if I know there are a few CFOs also there, we can have another dialogue on one-on-one with them, how cost accounting kills companies. Now, this is the meaning of exploit. Step 3 is subordinate all policies, decisions, and procedures to exploiting the constraint. Now, let's say right now we have shortage of manpower as our constraint, which is likely or apparently, if I can call it. Please don't cut expenses on canteen subsidy or these things. In fact, at this time, if required, I'm saying, please make your food so delicious that itself becomes a, let me say, USP for the workers to come and join you. That is the meaning of subordinate. Yes, we are increasing expenses at one place, but in the whole, we will be getting far more. Let me give you an actual example. I don't know whether it is still there. At least 40 years back, there's a company in Bangalore called Myco. Let's say it starts at 8 o'clock. It used to offer free breakfast to all its workers if they come. Let's say free breakfast is available from 7:15 to 7:45. Anyone who comes, he will get free breakfast. So most people, and they were offering very good, delicious breakfast. So most workers would say, prefer, okay, let me go early and eat it. Now, since food is not available after 7:45 and the shift starts at 8 o'clock, what are the chances that the workers will be able to come to their, machines on time? It improves the possibility enormously. Yes, there was increased expense of providing free food there, but that was nothing as compared to the increased throughput they generate, because they could operate your bottleneck machine absolutely on time, not a minute late. Is this clear for subordination?
Yes.
Okay, now I come down to step 4, elevate. Elevate, basically, typically we think it's adding more capacity. Now, this is wrong. Even if you have a constraint of operation, investment is not the only alternative. Can I get the same thing done outside, outsourced, even though it's somewhat more expense? That means my contribution per piece may go down, but doesn't matter. I'm not investing I, I'm not investing OE. Now, by all means, elevate, but investment is not the only option. But before you elevate and go out, have you seen even your so-called bottleneck constraint, what is its efficiency going? Are we working 3 shifts a day? Oh, sir, in the night shift, we don't get enough output. Don't waste your time. Look, if we run the night shift, what will be the additional operating expense we'll consume? And what will be the additional throughput will we be generating? If the additional throughput is far higher than your additional operating expense, what's your problem? Yes, your output in the third shift is not the same as first and second shift. I accept it. But why should it be the same? You are here to make more and more of your goal units. That's all is the most important thing. This must be understood very clearly to everyone. And lastly, I've explained step 5, avoid inertia. Basically, it says, as soon as you have elevated your constraint, it is quite possible the constraint might have shifted to something else. You have added capacity. The constraint can go to cash, supplies, or orders. Now, before you do that, you have decided that I'm going to keep my constraint in operation. You have to make sure that even after I've increased the capacity of the constraint resources, I have adequate capacity of generating orders. I have an adequate capacity of buying raw materials. I have got an adequate cash to handle the extra demand for working capital and other expenses. Is this clear to everyone, the 5 steps? Ira, any answer?
Yes, it is clear. There is a question from Dr. Suresh Nanda. He's asked, can you give some examples based on the current situation?
Suresh, you will have to tell me what constraint should I assume. Then I will tell you. First decide the constraint. Then I'll explain how to take care of it. Has Suresh responded?
Not yet. Some people are saying cash. Dr. Nanda has said there are a number of constraints, including manpower availability.
First of all, there are never number of constraints. At any one time, you have only one, the weakest out of them. First of all, if you are in cash constraint, you should never be. We have to get out of that. I am going to explain to you in the next few minutes how to get out of that. But let's say manpower is a constraint, basically means operations. Now, if operation is your constraint, Manpower is your constraint. Now there are two possibilities. Either you don't have the right manpower, that means there are people, but they are not having the right skills. Another is I don't have right people, number of people itself. Now, both can be easily taken care of, both. If right people are available, but not right skills, don't tell me there are not enough right people available in the world. Go and hire them, even if you have to pay higher. Let me explain a little bit. Let us say you have 100 worker requirement of particular skill. Unfortunately, you don't have the right skilled people. Because of that, there's a lot of rejection. So material cost goes up. There are a lot of delays. Let's say you have to replace all of them. But to get the right people, you might have to pay 2 or 3 times their salaries. So what's the issue? Look at what will be the incremental increase in operating expenses. And look at what is the incremental increase in throughput. And now you will find that in most cases, the throughput increase will be far higher than the additional expenses incurred on getting the right skilled people. Dr. Nanda, is this clear?
Yes.
Okay. Let's move on to my favorite part. How do we go into cash constraint? What are the conditions? Please look at the screen. Is this clear to anyone? If not clear, please ask what is not clear.
Clear.
Okay. So I'm moving on. Now, don't get feel threatened by this beautiful, what you call, very impressive equation, S by PVC raised to power 1 by N minus 1, etc., etc. This is nothing but compounding the, what you call, compound interest on your PVC. I'll explain very easily. Can somebody, I want some particular company to come forward and share their numbers, what we talked about. Someone can share what was their sales last year, what was their PVC last year, and what is their cash to cash cycle time. Anyone? I'm going to start calculating now on an Excel sheet.
Yes, if you would like to volunteer, okay, Varun Surekha wants to volunteer. Varun, I'm going to give you the audio rights, okay? So you can speak into the microphone. Just give me a minute.
Sure. Hi.
Hi, Varun.
Varun, start now. What is your sales last year?
Sales was 230 crores.
230, that's all. Don't give me any decimals. How much was your PVC?
65%.
When I didn't ask PVC percentage, but anyway, now that you talked about it, I'll multiply.
Yes.
So it is, now look at the next is sales upon PVC. The formula is very, very simple. It comes to somewhere around 1.5. Okay. What is your cash to cash cycle time?
3.5
months.
3.5, I don't understand.
So I'll give you raw materials is 1 month, work in process is 0.
No. You have to cash to cash cycle time in months. That's all, nothing else.
Okay, so 3.5 months.
That's fine. 3.5.
13.1%. Yeah.
Okay. So here is cash velocity. Everyone can see the way I'm working. The formula also I'm giving S by V PVC raised to power 1 upon N minus 1. Now let's look at this. Let me explain to everyone. Some people have joined for the first time. Let's say in your case, you have generated approximately, you have put in 150 crores of material into your system. Now, this 150 crores, once you put in, after 3.5 months, it becomes 230. Is this clear to everyone?
Yes, we're getting
Okay.
responses.
But now we'll have to look at it. At what rate, compound rate per month it is being generated. So here comes the formula. 230 divided by 150. I'm putting the brackets. It comes to 13%. Is this clear to everyone? Is this clear to everyone?
Yes.
Now, this is very important. At the moment, for every company, I will strongly recommend that they must first calculate their cash velocity, because this parameter can help them take much better decisions they are taking today. Should they get into cash constraint? Many of you may not be in cash constraint, but you keep the medicine ready should you fall in. Is this clear to everyone?
Okay. So two questions. One is, what is cash to cash cycle time, and what is the relevance of calculating cash velocity?
Excellent. Who is the gentleman or the lady who has asked this question? Were they there in the last webinar? Yes or no?
Arjun Rangar.
Arjun Rangar was definitely there in last.
Yeah. And the second question is from Tarun Nair. He was not there in the last session on the relevance of cash velocity.
Okay. So there's a little difficulty. The people who were not there in the last one, I hope they had watched the proceedings of the last session. But Rangar, let me explain to you. What was Rangar's question specifically?
What is cash to cash cycle time?
Excellent. Okay. Look, how, what is cash to cash cycle time? We buy the raw material. Let us say our terms with the vendors are that we will pay them once the material arrives immediately in our plant. So let us say we have 1 month material is lying in the raw material stage. So 1 month money has already been paid to your vendor, but it is lying in your godowns. Then let us say I've taken another half a month to process it and dispatch it to my customer. So another half month has gone in converting the raw material into finished good and dispatching it. Then it has taken another 2 months for me to collect the money from my customer. Is this clear? Cash to cash cycle time?
Yes, Arjun has responded, yes.
Okay, now there's a possibility. Everything remains the same, except that I got 1 month of credit from my vendor. So in this case, I have not paid the money on the date I received the material. So from 3.5, we'll reduce 1 month, so it will become 2.5. Is this clear, Arjun?
Yeah, so he has said, so this total time is cash to cash cycle time.
That's right.
Yeah,
now,
got it. He has written, got it.
Now for something, now that you have asked it, let us say it's the other way around situation also. Now the situation is the vendor says, please pay me the 100% money upfront, then I will give you after 1 month. In that case, I don't have any credit period, but I have to pay in advance 1 month. Then the cash to cash cycle time will increase to 4.5. Is this clear to everyone?
Yes, yes.
Now I'm coming back to 3.5 months. Here I had assumed that my customer is paying me after 2 months. It is also possible that customer is giving me 15 days advance. Then what will be my cash to cash? Look, to start with, 1 month in RM, 15 days in manufacturing. So it comes to 1.5. I'm not getting any credit from my vendor, but I'm getting an advance of 15 days from my customer. Then 1.5 will become 1. 1.5 minus 0.5 will become 1. Is this clear?
Yes, we're getting responses 1 month. Yes, yes.
Okay. Now let me see if I can share the other slide once again. For somebody who was not there last time. Let me run through. Dr. Ananda, it will be also helpful for you to see these 3 slides. You may remember, this is the example of a precariously balanced company. The money available to start with was 100 units. The fixed expenses are 50 units. Money available for material purchase is exactly 50 units. And our variable cost as a percentage of sales was 50%. That means with 50 rupees, I can generate a sale of 100 rupees. Is this clear? And money available next month will again be 100. Now, if you see, this looks beautifully. That means every time I'm just about managing my situation. My money available is just remaining 100. Now comes the next one. God forbid something happened and I got 10 units less than what I had anticipated. For some reason, customer deducted 10 rupees from my realization, and he said, no, some defective part was there. I had to spend money to repair it, and hence I'm deducting 10 rupees. If you see in the next month, money available is 90, OE is 50, money available for purchase is 40. So possible sale is only 80 because my raw material costs are 50% of the sales, or sales will be double of what I'm having the raw materials. So you see that as we go along, in the 5th month, we have 0 sales and we are closed. Is this clear to everyone? You see one important parameter, when you are in cash constraints does not impact linearly. 10% reduction in money does not reduce your throughput or profit by 10%, it can become 0. Similarly, on the other hand, as you will see here, a 10% increase in money has impacted also exceedingly high. In the next couple of months, we are already utilizing 100% of our capacity. Is this clear now to everyone? Why cash flow or this cash velocity we measure compoundingly, not linearly?
Yes, everyone is saying yes, they understand it.
Okay.
There are a couple of questions. Do you want to go further and then come back, or should I ask right away?
I think they will have to hold back because I'm coming to the most important parameter on what to do. And if I don't spend time, that will be the wastage. Theory is all nice, but what I'm going to do tomorrow morning? So first, I learned from Warren Buffett, don't do the right things, just stop doing wrong things. So what to do? What not to do, sorry. Stop measuring efficiency parameters. If you're in cash constraint, don't measure efficiency parameters. Don't measure your sales in turnover, in currency, or number of units. How many cars I have sold, how many tons of steel I have produced or sold is of no consequences. How many customers, how many projects, how many machines I have sold is of no consequence. Stop measuring these nice financial parameters. At this moment, they don't help you at all. Stop measuring business unit profits and product costs. Somebody talked about profitable products. There is nothing like a profit of a product. There's a profit of a company, not of a unit. And the concept of strategic business units with profit and loss statement, they're all wrong and harmful. Now, something interesting. Stop taking large customer order. Yes, don't take large customer order. Why? Anybody make a guess? Any answer?
Yeah, because you will tie up cash, large spending on raw materials, long money held up. If he fails, we may not be able to supply, increase cash to cash cycle time.
Who is this fine person who is giving such beautiful answer?
A lot of them have actually responded. Cash to cash cycle time was Satish Kamath.
Absolutely right. In fact, one of my clients, long time back, somewhere around 2006-07, he was making what you call hospital sterilizer. He got a lot of order from a hospital in Gujarat L&T had given some order for 32 hospital sterilizers. He said, don't give me 32 order for 32. Give me 16 orders for 2 units each. His response, his reason was, there was an inspection to be done. If I take an order for 32, the inspector will only come once all 32 are ready. He neither had the money nor the space to keep these 32 units. And should there be a problem in one of them, the payment for all 32 will be held back. So he said, I'll give you a discount, a small discount, if you give me 16 orders, but not 32. Not one order of 32. So we were saying is what not to do. Stop taking large manufacturing orders. Another stupid thing which comes is stop buying large quantities for availing quantity discount and freight cost saving. I think freight cost saving has come twice. Correct. Okay. Now, this has a particular relevance. In many companies, organizations use more than one particular type of material or SKU. However, even if just one is not there, we cannot produce the final output. Just to give you the example for home, at home, even for cooking, we'll be using at least 30, 40 different variety of materials. Now, many times, assuming the flour or the ghee or the oil is available at a very heavy discount, it's possible if you're in a cash constraint, in order to take advantage of quantity discount, you buy a large quantity of these things. But be careful, now you may run out of money for buying salt or something similarly, very small value. Even though you have very high inventory of one large item, but unfortunately you do not have the balancing small quantity of very cheap item on the other side. This is very, very common. Almost in every company I go, on one side, I'll find some material available, expensive material available for next 3 months, but for a small value item, which is not there even for one day. This happens on a repeatedly. How often you have experienced that you got everything except the packing material is not there. It is so common. Why? Because of one wrong thing. There's a policy is L1, buying everything at the lowest possible cost. It's the most stupid thing to do. Another thing, at this time, when everyone is trying on the assumption, we must reduce costs because profits are not going to be there, they cut expenses on tea, coffee, etc. Once again, a very stupid thing. Please don't do that. At this time, they were not going to add anything significant. Once again, it is the assumptions being problem. I have to take you a little bit back. You remember profit is equal to sales minus expense, nothing rocket science. Sales minus variable expense minus fixed expenses is profit. Sales minus pure variable expense is throughput, and fixed expenses, we called it operating expense. So profit is equal to throughput minus operating expense. Now, if we have to increase profit, there are diametrically two different ways. One, throughput increase or reduce operating expense. Unfortunately, because we don't know how to increase throughput significantly in a short period of time, we try to do what we think we know. Of course, we don't know, but we try to do is cut expenses. And where do you cut expenses? On tea, coffee, or tea, coffee is a, I would say, synonym for picking up small things, nothing more. What we don't realize that many times when you cut expenses on small things, it has an impact on your throughput, and the reduction in throughput is far higher than the saving on your operating expense. So please don't do all this. Now let's look at it. What shall be done? I had so far told you what should not be done. First is measure dispersible cash available almost on a daily and weekly frequency. In fact, I recommend, now I'm saying very carefully, I recommend the team meeting almost at 8 o'clock or 9 o'clock in the night every day on the Zoom to look what is the cash available in the bank today. Cash, dispersible cash, how much cash you have in the bank. And now you can plan for tomorrow, how much money should we allocate to whom by tomorrow. Don't do it in the morning, do it in the night, because whatever money had to come has already come in. And one suggestion and one request, you can offer less money to anyone within the company or outside the company. But whatever you have committed, you must honor. Now that is only possible if I have certainty of the money already I have in hand. Now that money available, certainty can happen only in the evening, because by 8 o'clock, all bank, transactions, RTGS, NEFT would have been over by that time. And you know precisely how much money is there in my bank, or for which I can send it electronically or I can cut a check for them. Second thing, measure all overdue financial commitments. I call it fever. Now, what are these overdue financial commitments? Startingly, all overdue vendor payments. And this is where I feel very bad, because even though everyone talks about vendors are our partners, but if you don't even measure how much is overdue to them, what consideration you are showing for them? It is all nonsense. So first start measuring and then try to bring it down. One simple parameter is, if your fever is coming down, that means you are doing something right. And vice versa, if your fever is going up, something wrong is happening. It's very, very simple. Now, I don't know whether in Tele or whether in ERP, is there such a provision available at all. So far, I have not seen in almost any company except one. So if not, there's no such provision, please start measuring it. Also measure not overdue commitments. What do you mean by not overdue commitments? That means I have bought some material to someone. He has given me a credit of 30 days. I've just bought it yesterday. So I have another 29 days to pay it. But nevertheless, I have to pay it. At least you should know how much you owe to how much financial commitments you have made to the outside world or inside the world. So financial commitments include vendor payments, includes the payments to the banks for the interest and the loan repayment also. It also means if there's any delay in salaries. It also means if there's any delay in statutory payments like GST, whether on Provident Fund, whether on ESI, whether on TDS, etc., etc. And lastly, measure operational free cash flow. Now I'm using the word operational free cash flow. Now, what is the difference between operational free cash flow and free cash flow is, here I'm not talking of any money invested or money spent on new investment. Here also I'm not talking of any fresh loan taken in. Similarly, here I'm also not talking of any fresh repayment done. It is basically from my operations, how much money did I collect today or in this week, and how much payment I made for the normal things. This is what I call operational free cash flow. Do you think it's easy, or these three parameters are very difficult for you to do it? Response, please.
Easy.
Okay.
4 or 5 responses, easy.
Yes. In fact, the interesting thing will be the difficulty will not be in the bottom 3. The difficulty will be in the top 6, 7, 8. Because we are so used to.
People have requested if you can explain operational free cash flow again.
Okay. Before I do that, what I was trying to share, that stopping current wrong practice is more difficult than starting new right ones. We're very happy to start new ones. But unless you stop measuring the old ones, those behaviors will continue. Please remember, measurements drive behaviors. So coming back to measure operational free cash flow, very, very simple example. how much money did I collect from my customers? Can we know that? Any difficulty? Ira, can you just read it?
Yes, can be done.
Can be done, no issue at all. Now you look at it, how much money you paid either to your vendors or to your service providers, or for salaries, or for statutory dues like GST, Provident Fund, TDS, etc., etc. Or for any operating expense, there was a insurance policy was due, you paid premium for that, etc., etc. Or you paid some money to your canteen contractor. That is the difference between the two is operational free cash flow. Is this clear or not?
Yes. Yes.
That's all. Money in minus money out. Only a few things are not taken into account. If money has come in because I got a fresh loan from somewhere, that I will not consider. Similarly, if I made some repayment to the bank, not on account of interest, but I have reduced my loan amount, that I will not consider. Similarly, if I got, let me say, some money from equity investment, I paid more, I've done a rights issue. For that, I've issued one more debenture. These are not the things to be covered. Here, coming only from operational. Is this clear to everyone?
One question, what about CC limits?
Thank you very much. If your CC limits have increased, that you will not take into account. If similarly, if CC limits have decreased, that I will not take into account. Look, CC limits is nothing but your credit card limits going up or down. Then what you can see, if you're using CC, that means you do not have enough working capital of your own. You need to borrow from the bank. So it's very simple. You see the change in the CC limit utilization. Let us say I had a CC limit of 100 crores. In the morning, my usage was 50 crores. That means another 50 crores, I still had the ability to send checks, etc. By the end of the day, let us say my CC limit utilization was 47 crore. So how much more available now? Any answer? Has anybody given an answer?
Yeah, answer I'm getting is 3.
53 is my CC limit available. In the morning it was 50, now it is 53. That means I've consumed less. So my free cash flow is 3 crores, as simple as that. Shall we move on, or is there anything else left here?
There was one more question from Mr. Jassawala. What about CapEx?
CapEx is not operational free cash flow. That is, I said, if you had any investment is there, that's not a part of this one. And as of this moment, there'll be very brave people who will do investments. And sometimes, sorry if I'm using a strong word, brave means foolish also.
One more question.
Yeah, okay, go ahead.
Yeah, please explain not overdue commitments. At the end of the slide, it's written.
Yeah, I'll explain. Let us say the total amount I have to pay to my vendor is, let's say 20 crores. Out of these 20 crores, 5 crores was already, the time to pay has already gone by. So 5 crore is overdue and remaining 15 crore is not overdue. I have to pay, but they are not yet overdue. Is it okay?
Okay.
So I'm moving on to the next one because next slide is the one which is even more powerful. Okay, here is the actions. Work out cash velocity per month for various business lines and product families. You can do for various product lines also. Basically, what we need from a particular business line, I know how much was the revenue did I generate. I also know for this product how much variable cost I have, pure variable cost I incurred. I also know what is my approximate cash to cash cycle time for this business line or product line. I can calculate cash velocity. Any difficulty here?
No, no problem.
Second one, allocate cash with highest priority to highest cash velocity business lines or product families. Let me explain. Let us say in many companies, there are more than one business lines. Unfortunately, we have a shortage of cash. Should I buy the raw material for A business or B business? Which one to run and which one to stop? Now, you know that one particular, I have a limited cash. Cash is my constraint. At this moment, I should decide, should I run this line or another line? Just to give you another example from steel company, we make that flat plates, and we also make long bars, what you call rebars. Now, if I have to decide for these two, I have limited cash. I can't run both. I can run only one of them at this moment. I have to stop one. I don't have a choice. Though, howsoever painful it may be, I have to have a choice. And I calculate both for the plates and the rebar, wherever the cash velocity is highest, I'm saying first I will give as much money to the highest priority business so that I fulfill their demand. If anything left over, I'll give to the rebar one. Let me explain through an example from current situation, which is a highly what you call health issue. Some painful, but this is we have to do. Assume you have 3 patients who need 2 units of medicine. Without anyone getting 2 units, they will die. Now, you have only 4 units of medicines. You have 3 patients, each one needs 2. And you have only 4 units of medicine available. How will you give to whom? I want some answers.
Age-wise, somebody has said age-wise, some have said give to the younger one.
Okay.
Highest survival chance.
Absolutely right. First priority would be that who has the highest survival chance. Because even giving medicine does not guarantee that person will live. But at least it increases his chances. So the one whose chance of survival is the highest, first I will give the 2 units to that. Since I'm left with another 2 units, I'll give to the next highest. Oh, but sir, then one will die. Yes, one will die. Now the choice is either I divide equally to all 3, 1 by 3, 1 by 3, 1 by 3, then all 3 will die. So we don't have a choice. Don't cry at this moment that I have to run all businesses. Sorry, today is not normal time. When you're in cash constraint, normal rules go out of the window. Shall we go to the next one?
Yes.
Pay truckers, freight forwards, etc. absolutely on time. You see, you purchased the raw material. You made everything right. You got it inspected also from your customers. Unfortunately, now you're stuck because your truckers, they're refusing to give you trucks because you're not paying on time. This is the money you have to see. With a small amount of money, what you pay, money inflow, chances become very high. So it is simple ratio, how much I'm paying out and how much payment I'm going to get in. So please make sure that towards the last part of your cycle, don't hold back any payment, otherwise you'll be in problem. I've also written freight forwarders. Many times we have an export payment where we can encash the LC provided we have a bill of lading is available. Now, many times the bill of lading gets stuck because my freight forwarder is not behaving properly because his past payments have been held back and he takes the slowly. Is this clear to everyone?
Yes.
Next comes reduce cash to cash cycle time. This is the most important thing for your decision making. I would now explain through the same Excel sheet once again. Where is the Excel sheet gone? Look here. Let's say I have two choices. I increase my prices by 10% or I reduce my cash to cash cycle time by 10%. Let's see in either case what happens. So when I increase my price, Surekha had given this.
Yeah, this is Varun's example.
Okay, now look at it. Your cash velocity has gone up from 13% to 16%. Excellent. Now let's look the other way around. I'm not increasing the price. I'm keeping it same. I'm keeping PVC the same. Cash to cash will also remain the same. Sorry, cash to cash will go down. Now this is going to be 0.9 of current cash to cash cycle time. Let's see what happens here. In this particular case, our cash velocity has actually come down. So here, increasing price is more important than reducing cash. But in most cases, reducing what you call cash to cash cycle time is much more worthwhile. The reason being, for example, now how convenient it is to increase price by 10%. Any answer under the current condition? Easy or difficult?
Very difficult, tough.
Okay.
Difficult. Everybody is saying difficult.
I'm now saying in this, I had taken 2 months as my payment time from the customer. Let us see, we are saying to the vendor, I'll give you 5% discount. Pay me now, 5%. 5% for getting 1 month early. That's all. Now let's see what happens. PVC will remain the same. By reducing your price, PVC does not change. It should be very clear to everyone. Percentages will not work here. Surekha, you have to understand this, that when I'm talking about PVC, don't every time just give me 65% PVC. Say what is the PVC I had. Now the cash to cash cycle time, how much it will be? I'm getting for 1 month earlier because I had given him 5% cash discount. So this will become. Now let's look at the cash velocity. Can you see something here? Reducing cash to cash cycle time has a huge impact on your staying alive. Staying alive, because if you run out of cash, you are gone. Okay. Now, how do I reduce cash to cash cycle time? The two major components are inventories and receivables. Two major. There's a third one, which is the payable. But I'm assuming at this moment, the situation can come that the vendors will not give you any credit period whatsoever. I hope they don't ask for advances. So how do we reduce inventories? First, I'm talking about that. Longer, higher the MOQ, more will be your average inventory. Is this clear to everyone? Let us say the MOQ for a particular item, what I have is 10 units, 100 units. My consumption per day is 10 units. Let's say the vendor is very reliable. He will supply instantaneously when I ask for it. Now, once I get it, I have a starting inventory of 100 units. It will get consumed over next 10 days. So what is my average inventory over these 10 days? It will be about 50 units. Is this clear to everyone? When I buy, it becomes 100. When I get the next supply, it has just become 0. So average will be 50 units. Now, I'm consuming 10 units every day. So what is my average inventory holding time? 5 days. Let's go the other way around. I've requested him that I'll give you a higher price, but can you reduce it to 20 units? Now let's see what happens. In 20 units, on day 1, my inventory is 20. On day 2, at the end, it will become 0. The average inventory is 10. So how much is my inventory holding time? 10 by 10 is 1. So there's a huge advantage when you reduce MOQ from the supplier. Even if you have to pay a slightly higher price, don't too much worry. Calculate your cash velocity. Because as soon as you have to pay higher money to your vendor, your PVC has gone up a little bit, but your cash to cash cycle time has come down. Is this clear to everyone? The same thing happens. Instead of getting a full truck, can I get a smaller truck so that I get minimum quantity the quantity what I'm purchasing in one supply, I should be getting smaller. It will increase my variable cost, but check your cash velocity. If it makes sense, using cash velocity as the parameter, go for it. The third thing is the same, buy material in small quantities very frequently, even at higher rates, keeping cash velocity in mind. Now, this has another advantage because whatever inventory you have reduced, that generates immediately into your free cash flow. For example, if I was buying on an average every 10th day, 100 units, 1 MOQ, let's say the price for each one of them was 1 unit. So my average inventory would have been 50 units, which means 50 inventory was stuck in the inventory. Now, when I buy 20, my average inventory is 10. That means my inventory has shifted, reduced from 50 average units to 10 average units. So which means I got a cash generation of 40 units. Is this clear to everyone?
Yes, yes, it is clear.
Okay. Now, this helps RM inventory shrink cash to cash cycle time. Collect money early from customers, even with significant discount. I've already explained. In most cases, you don't have to give you 5% discount per month. Even if you go 2%, 2.5%, in most cases, it will work out. Perhaps 3% also will work for it. The advantage is if my cash velocity is above 10% and I'm getting money at 3% per month early, it makes sense. It's as simple as that. Then collect money stuck with government authorities, extra taxes paid, GST, VAT, incentive, etc. Often we believe, oh, government does not pay on time. I don't agree. I've got my refunds both on income tax without paying any bribe, GST refunds, etc., much ahead of time. Of course, you have to fill in all proper formalities. You have to have a very heavy follow-up. Yes. Even if you have to put one person solely for sitting at the government office throughout the day, throughout the month, so be it, because the money what you paid for putting that person is much small than the cash you will generate by getting that money faster from you. Same thing for insurance claims. Typically, sir, we have filed the insurance claim. They are taking time. All this nonsense is there. Please, we don't realize that insurance claims can take months and years together. Just stay put there. Every day you go, I want it immediately. Be at it. The chances are you will get your insurance claims much faster than you would have normally done it. Now I come to even something more interesting. Settle disputed claims quickly, even at steep discount, keeping in mind cash velocity of the organization. Now, let us assume, I'm now going back to my Excel sheet to show you another example. Let us say there was money of 100 rupees was stuck, 100 crore money was stuck with some dispute with a customer. Now, how long in India should I take from the time I file a case? How many years back do you think I'll get a case settled? I'm not saying in our favor, but when will it get settled? Give me some number. The period is years. Choose some number.
10 years, 20 years.
Okay, I'll take 5. I'm just taking 5. Now, cash velocity. How much cash velocity should I take per month? How much should I take? 10%?
Yeah, 10%. A lot of people are saying 10%.
Okay, let's say 10%. Now, let us say through negotiation, the person whom I'm having a dispute, he says, I'll give you 20% of this. Now, a decision has to be taken. Should I take it or not? I am assuming I'll have 0 expense on lawyers, etc. So let's see. If I get settlement amount is 20%, I'm taking. So what will be the settlement amount? Actually, it will become. Is this clear? So I got 20 crores right now. Now, by the way, what is the meaning of cash velocity per month? It means 20 will become 22 in 1 month. Is this clear to everyone?
Yes.
Is this
yes,
clear?
Yes.
So what will be the amount after 60 months? Now, settlement time, normal time for concluding the case. How much will be in months? How much it will be? Anybody can give me the answer? It's very simple.
60.
How many months are there? So it's 60. So now you please look at it. If I get 20 crores in a bank, which gives me 10% per month, after 60 months, how much will I get? 10% compounded. Here is the answer. 20 into 1 plus 10% raised to power 60. Is this clear to everyone? Formula, what I have written.
Yes.
Now I'm entering. How much it comes? Now let's look at it. If I make it 5%, then what happens? Let's see. You see what it shows. Please don't get into dispute. Settle at the earliest whatever you have. Don't waste your energies on that. Is this clear to everyone? When you are in cash constraint, don't waste your energies. Don't waste your money. Get the money. It is much better to take it now than getting and hopefully winning the case. We are not sure at that also. And I've not taken any amount to be paid to the what you call lawyers. Okay, let's move to something more. Break large customer orders into small lot orders in consultation with the customer. Is this clear? And why should we do it? Though I have explained it a little bit before, but do you understand why should we do it? Any answers? Ira, what are the answers?
OTIF goes up, reduces average receivables, reduce cash to cash cycle time, increase cash velocity, fast rotation of inventory and receivables.
Thank you so much. Next is produce in small batches. Operations and equipment are not the constraints, so don't try to save on the setup time. Many times it is possible that there is a starting, whenever you set a new machine, there's an initial wastage. Cover that, no issue whatsoever. But don't get in, no sir, our efficiency will be down, our cost will go up. There's a lot of bullshit goes up in the name of cost going up. Cost going up overall in what? I'll give you an example. It happens in various stages and across all organizations. At one of my clients, we were getting material coal from Australia. So I was asking them that instead of getting ships of 60,000 tons, why don't you get in 25 or 30,000 tons? Immediate response was, sir, our freight cost will go up by 50 lakh rupees in a year. 50 lakhs looks in a big way. Do you agree?
Yes.
I said, okay. Tell me what was our total buying, including freight cost, we are doing. It came 100 crores. So on 100 crore, if 50 lakh goes up, how much my variable cost of coal has gone up? By 0.5%. So many times you will listen these things. No, sir, this is the cost will go up. It depends. Is the cost 1 rupee or $1 million? There's a huge difference. Don't let this language threaten you by not taking small batches. Work it out. Yes, there's an initial loss of a batch. Let's say in Thomson Press, when we starting any new printing, there'll be a certain loss. But how much? Please calculate in rupees lakhs. And then see, okay, to that extent, my variable cost has gone up. Should I do it or should I not do it? Use cash velocity. It will help you in a big way. Get advance or reduce credit terms for customers for shorter lead time. You see another advantage when we reduce small batches, our cycle time to deliver will become smaller and smaller. Please, can you get advance from customers? Because now you are giving them faster service. If nothing else, at least you can demand reduce credit terms. In both the cases, you are reducing cash to cash cycle time. Any questions before I move on to the next one? Okay.
Yeah.
Keep all your financial commitments. Now, what do I mean? Sometimes I'm unable to pay to my vendors or even to employees their full amount, what is already overdue. Okay. Can you give them small amount? But make sure you tell them beforehand that how much money I'm going to pay you. Let's say I owe you 100, but I cannot pay you 100. I'll pay you 20 on this date. Whatever date you say, whatever day you say, whatever amount you say, then it must happen. Build credibility. Once you build credibility, then your vendors will say, okay, you are in difficulty, but you keep your promise. The chances are you will get a more favorable, experience from your vendors. Is this clear?
Yes.
Exactly the opposite of what I was trying to do with the customers, we can do. Explore higher vendor credit even with higher price. Let's say my price goes up a little bit, but he gives me extra credit. Let's again go back to the Excel sheet. I don't know why I'm not able to go to my Excel sheet.
Try escape.
No, that's what I'm, oh, it says thank you. I explain, tried too many times. It doesn't matter, I'll correct it. In this particular case, same here. same Sureka example. Everything else remains the same, except that I got, now I've increased the price, let us say by 2.5%, and I've asked him to give me extra credit for 15 days. 2.5% for 15 days is the same as 5% for 1 month. Or maybe I will take 5%, what you call increased price, but I got an extra credit of 1 month. Let's see what happens here. Now, how much will be my cash to cash cycle time now?
2.5.
No. Any problems? And please, 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 don't tell me your profit is going down. Remember, otherwise you're about to die. You're in cash constraint. A small increase in cash can increase your overall benefit in a huge way. Look at those examples which I had given in the tables. A small increase of 10 amount can get you out of the cash constraint. Are you realizing that? Answers, please.
Yes.
All I can tell you here is, in the past, I have been able to get people out of cash constraint only by selling their scrap. There was so much material lying in their obsolete material, scrap. We just sold that and turned the company around. You don't need much. Please appreciate, once you have a shortage of cash, you bring down very rapidly. On the other side, a little bit more cash can also take you out of cash constraint very, very rapidly. More than one set of companies I have been able to, or we have been able to take it out of cash constraints using these small things. These are not very rocket science stuff. Very, very, very simple stuff. Any questions on vendor credit before I come to the next few ones?
Clear.
Okay. Now comes convert OE into pure variable cost wherever possible. Now somebody from service organization had asked me, how do I convert I've got 10, 12 people, software company, they develop software. How can I convert them into variable? Since we cannot link directly that by doing this software, how much we'll get extra, ask them that, look, if today we are paying you 10, I'll pay you 5. But remaining 5 or more, I will link to the collections we have. If we do more than the before calculation collections, you get more. If we get less. In the process, some part of OE has come into variable. Another possibility. Today, many companies have permanent employees and contract employees. Now, there's no shortage of contract workmen in the country, except we don't want to pay them higher salaries. But understand, they provide you a lot of flexibility. So pay them higher, and you can also ask your existing employees, do you want to get converted into contract workmen, casuals? I'll give you 20% higher pay, no problem. The advantage is my OE comes down, my money, if I work, I'm paying you more. If I don't have work, I have no problem. Basically, I'm converting some portion of OE into variable cost. Please ask me questions if you have on this. Ira, can you read any major question?
No questions. Any ideas for converting OE?
I've just now given you.
Yeah, and
your manpower is biggest expense.
Then somebody said, in case of skilled manpower requirement, this cannot be done.
No, don't ever say it can't be done. You say you do not know how to do. I also don't know. But how do you know in the whole world nobody knows how to do it? You may have to pay a higher money. You can get it. In very rare case, it will be that there's only one person, only a few person who can work on your machines. What happens if they die? Will your company close down? So before you say it can't be done, you know what is the meaning of it can't be done? It means I don't know how to do it, but I also know in the whole world, nobody knows how to do it. So please, you do not have the world's whole knowledge. Then these days, operating expenses like rent, etc., please do negotiate. And at the moment, in the entire world, this is happening. You might have already read in the newspapers. Look, I can't afford this rent. Now, what happens to your landlord or whosoever has given you on rental? Will he get today somebody else getting into rent faster? If he loses a couple of months in the process, look what happens. It's basically our assumption. What we have not experienced does not mean cannot happen. At worst, it will not happen. At least you can try. Have you tried even? Or we have given up before?
Okay, one question from Raghav Kheria. What about salary reductions in this scenario, which everyone is doing, but it could also lead to decrease in throughput if crowd reduces?
This is what I'm saying. Salary reduction is not a difficult thing. You can do it, but in the process, what you are not realizing, how much my throughput will go down. I would put it slightly differently. I would say, look, you reduce your fixed payment and link it to something for the company as a whole, like or profit or any one of them, or even sales. Like, look, if we collect more, I'll pay you slightly more for that because you are becoming more risky with me. It is possible to do so. Now, obviously, don't do it with the lowly employees like your peons or drivers, etc. They hardly have money. They don't save at all. But people, manager and above, I'm just making a number. Anybody whose salary is above 50 lakhs or plus annual, you can definitely try with them. Now, one more thing. Many times we have expenses which are annual in nature. We spend only once in a year. Many AMCs do you too. For example, insurance you do. Now, when you do the insurance for your factory, you have to pay, I mean, typically we take once a year. Now, I have checked with the managing director of a large general insurance company. He said, of course, various tenures are possible. So have we discussed that I'll pay you every month so much money? Of course, it will be more than my normal one, but then again, look at your cash velocity. Instead of paying once to save some money, I'll pay you every month more. But in that process, the advantage is your cash right now is conserved. Is this clear?
Yes, yes.
Okay. And the last one, I'm sure you can do it in India very easy from this month itself. I'll explain you. This is the easiest of all, but policy things prevent us. The concept of month prevents us. I've written, do not dispatch in the last 3-4 days. I'm saying, please, even if you can dispatch, but don't dispatch. But I have also, I've not written here, when to dispatch. So let me give you an example for a very simple thing. Let us say you have an invoice for 100 rupees with 18% GST. So net sale is 100, gross sale is 118. And let us say your payment terms with the customer is 1 month. So you are dispatching on the 30th of this month. You are expecting it that by the month end, I will get, after 1 month, I'll get the money. I'm saying instead of 30th, please do not dispatch today, dispatch it tomorrow morning. Now look, what is the advantage? First, the disadvantage is my money 118 will come one day late. Is this clear to everyone? So I have lost the use of 118 rupees for one day. But what is the advantage? If I dispatch today, I have to pay this 18 rupees by 20th of next month as GST. But if I dispatch on the 1st, the same thing, I have to pay 20th of next month, which is 50 days from now, which means you get 30 days extra to pay the 18 rupees, which means 18 into 30 are how much? 540. So I have got the benefit of not paying money 1 rupee for 540 days or 540 rupees for one day, but lost the benefit of 118 for one day. So it makes sense to do it. Do not dispatch on the 30th, do not, or the last day of the month. Do not dispatch in the last 4 days. But don't hold back if it is more than 5 days. Why? 5 into 118 becomes 590, while 18 into 30 is 540. So the break-even point comes, don't dispatch in the last domestic dispatch I'm talking, where you have to pay GST. If you don't have to pay GST, don't hold back. Is this clear to everyone?
Yes, we're getting responses. Yes.
So there are very, very small things. We have to use our heads. Whatever has not happened, we have to challenge why I'm doing it. The most important thing right now is to survive. And I've experienced some very intelligent people. Sir, now it is fine, but what will happen in the due course? So my answer to them is first survive, then think of thriving. Who knows that you will be surviving next year? There's no guarantee that you will survive next year if you don't do this. My favorite example for this, which I had given in the US way back in 2002, let's say you're dying of thirst. You're absolutely dying of thirst. The nearest hospital is at least 2 hours away. And forget about mineral water. You have no water available except some dirty water lying in a drain. Now, if you drink that water, you will get severe, what you call infection. You will get, guaranteed. But you can survive for 4 hours. Question is, should you drink that dirty water? Please give me response.
Yes, of course.
Same thing here. Today, you're in cash constraint. It's not a normal situation. It's a very, very different situation. Hence, all the rules, what were right at one time, may not be right now. Check it out. And at the end of the day, I would only look at it. Draw your cash flow. See when do you go negative. Please don't try too many things. Just draw the cash flow for 1 month. Can you survive this month? Can you survive 1 more week? Just draw cash flow for next 3, 4, 5 weeks. That's it. No more, no less. And I don't want too many calculations of profit loss. Very simple. Next 4, 5 weeks, how much cash will you get it? Please write specifically. Don't say I have so much of a sale. Say how much money will I get from my customer. Sale does not automatically guarantee cash in your bank. It depends upon your what you call payment terms. It depends how much is the habit of your customers to pay on time. Many customers don't have a habit of paying on time. In fact, most don't have it. They think it's their birthright to delay the payments. So look at how much cash you are going to get in the next 3, 4 weeks. how much cash you have to give it to survive for next 4 weeks. See what will be your closing cash. And remember, closing cash like an Excel sheet cannot be negative. You can have zero cash, you can have positive cash, but you cannot have negative cash. Accountants, please note, many of the analysts of people who like to play with Excels, they are very happy. Oh, we will be plus now and negative now thereafter, and then again plus. It's like crossing a river where the average depth of the river is 4 feet. But somewhere in between, there is a 7-8 feet depth also. Sorry, you will not be able to cross, you will die. Average is 4, accepted. Somewhere 2, somewhere 6, somewhere 8, and somewhere only 1. But in between, if you have 6 or 8, and if your height is less than that, you will die, you will drown. So keep the sense of urgency very important. First survive, later we'll see how to thrive. Any questions?
Yeah, there is one recurring question on bill discounting, that if the customer isn't paying on time and we discount the bills to get cash now, is it the same thing?
Yes and no. Because bill discounting, supposing bill discounting basically means the bank has given you credit on behalf, on the assumption that your customer will pay him on time. If they don't pay, the liability is still on you. If that is the case, please think again. I would rather prefer, I would give even a little bit higher and get the cash in my bank. I don't want this headache of making sure that my customer has paid to the bank on time or not. Otherwise, I have to keep a track of also that. Another small assumption which I forgot to share, don't think your credit limits will remain unchanged. Your CC limits, there's a possibility that they can also come down. So keep that in mind. Don't be in false assumption that whatever credit you're enjoying from your bank will continue forever. Any question?
I think we can take one. There's one last question which we can cover. It's almost 7:08 and close then. So this is another question from Dheeraj. Assuming I don't have a cash constraint, or I cannot increase my revenues by processing more material because of capacity constraints, what would be the benefit of offering discount to the customer?
None. None. You see, if you don't have infection, taking antibiotics will not help you. That's why I'm saying the first step is identify your constraint and work accordingly. If you have a constraint of operations, you don't have a constraint of cash whatsoever, the entire thought process has to be different, because you do not have this infection. You have some other problem. We'll find a solution for that. So when you say you have a constraint of capacity, Dheeraj, then you will have to look at it, which machine is what is stopping you? Why is it not working 24/7? What is the problem? Can you increase it by having a few more people? Even can you run the third shift? Even the output will be somewhat smaller. Don't look at any efficiency parameter. Look at it, what is the additional OE you will have? And since you don't have a constraint of orders, which means you have customers available for you, look at it, what is the additional throughput you will generate? Look at additional throughput, look at additional OE you have to do. If the difference is large, go ahead. I think it is now 7:10.
Yes.
Thank you very much. I appreciate everyone for staying so long. We had, even at this moment, we have 274 people. Thank you very much. I wish you all the best.